Hey, hi guys, this is Ray from nextforextrade.com. Today is Monday the 19th of August 2019. It's about 6 a.m. here in the UK, and I'm going to do a slightly different format today. I'm going to go through the charts first of all, and then I'll go over the positions that I have open currently. So let's just kick off. Let me just see if I can get my charts up and working properly. There we go. Okay. Of course, if you do like what you're hearing today, best thing to do is to go to the YouTube channel and subscribe on there. And obviously you can get this information as soon as it comes out, because this is all based on live trading. So yeah, let's kick off. Let's have a look. So we've got AUDCAD here first of all. So what we got here? Yeah, some nice price action on this on the daily. So we've got some lower highs, lower lows. Got the standard deviation channel around the price, and it's currently above our medium or average, if you like, of the standard deviation channel. And we've seen some reversal type candles off of some previous resistance. So this horizontal here, I'll just bring down. We can see that Friday's candle came into this, it found resistance, previous levels here. If we look on the time frames lower than this, I'm sure we'll see some other indications of that resistance being more prominent. And so basically in this, we're assuming that this is a lower high. Now, as you'll see from my other videos, I typically prefer the resistance to come off of the upper edge of our standard deviation channel, but as long as it's above the average, so the middle line, there's still scope to consider it depending on what the lower time frames are saying. Now I am in two other positions at the moment, so I'm not actively looking to open additional ones, but this is something, if you are looking to open trades, you could consider the pros and cons of this. So if we're looking at the 4 hourly on this time frame, so we'll work down through the time frames as normal. We've got the 4 hourly here, which is effectively this move that we're seeing on the daily that I've got in the standard deviation channel. And we can see as well here, it is looking slightly overbought in this move if we are using this for the for context. So it's overbought because it's coming up to the upper edge of our standard deviation channel. We've also got this previous resistance as well that the price had encountered, giving some reference point for our stop loss above these type of levels, because this is our problem area. This, if we're deeming this as a lower high in this move, then if the price starts to move past these previous highs, then it's no longer a lower high, and that's a good time to be out the market. Now, based on the price action, the thing that concerns me slightly about 4 hourly, let's see how this. I'm not a fan of the way that this is retraced, and I mean, it's good that it's encountering the upper edge of our standard deviation channel here, and it's fallen away and it seems to be finding resistance, and obviously we've got this as well, but this area of support that we're seeing in this these lows as it comes up in the retrace isn't great. Ideally, I'd like to see that broken. So using the standard deviation as a guide. In fact, now let's drop to the hourly to get some more context for this. So what's the hourly saying? So on the hourly, I would look at this move here. Yeah, I thought so. So let's put these side by side. So we can see this move that I've caught in the hourly here is the same as this on the 4 hourly. So it's good that we're overall seeing some bearishness on the higher time frames. Gives us context as well for our stop loss. But what I want to see is the lower time frames to be a bit more congruent. So to be, that time frame correlation, for them to be saying the same thing, if you like. So what I'd be looking for if I were to trade this today is for these previous lows here to get broken. So if these were to get broken, then I look for a pullback to either the standard deviation average, so the middle part, or a reversal off of the top like we saw here. That would just give a bit more credence to the fact that we're going to see some more bearishness. And in terms of a stop loss, be looking for stops above this type of level here. So above these previous highs, we can see across the board. So these on the 4 hourly, Friday's high on the daily. So it just gives it a little bit of wiggle room should the price start to reverse against us and start to make higher highs and higher lows. We can move the stop to break even. And on this, I mean, going for a 1-for-1 in terms of reward to risk, it would put profit targets roughly around this level here. So there's still legs in on this in the daily to go much further than that 1-to-1. So the previous taking out profit off the table before this previous low as approaches here, because it's probably going to find support, or even staying in for a longer position to see it get to these oversold areas here if that were to happen. So yeah, potential trade there on the AUDCAD. For the most conservative trade, like I said, it would be best to wait on the hourly to dictate how you enter that. So wait for it to break those previous lows and pull back, and then look for entries after that. So AUDCAD, let's have a look at the next one. So very similar story here on AUD Swissy. It's almost identical in that we're seeing the lower highs, lower lows. Got the resistance that we're seeing on those previous highs there. Also interacts with this low back here. Doesn't go much further. Could look on the weekly to see how more significant that is, but I mean, I've got enough information here. 4 hourly, this resistance zone here. So if we're looking to short this, really a stop above these levels is the play, really, because this is our troublesome resistance that we're seeing. It's not great that this isn't ready yet. I'd like to see you move past this candle, so on the 4 hourly, and move past this low here, which would correlate as well on our lower time frames, so like the hourly and the 15-minute, to the price starting to move down, and we'd be able to put a standard deviation channel around that as the price would start to move down. Same concept, wait for it to break these previous lows. So this low here is probably the low on the 4 hourly, so we'll just put in another alert so that's visible on all the time frames. Yeah, so this low here that we're seeing in this price action is this a low that I was talking about on the 4 hourly. Yeah, I mean, at the very least, I'd like to see it move past the low of the 4 hourly. Even better is if it starts to move past the low here and start to move down with lower lows and lower highs. So this might be something that happens, if it does, in the US session today, possibly into the Asian session, or possibly a setup for tomorrow. But yeah, definitely bearish on this. We've got a nice reference point above this resistance, so that's another potential trade on the AUDCHF. This is similar, but I think the price action on the other ones was better. So no, this, I'll come back to this. I'm in this trade. This, no, and I'm always looking at the daily here. First of all, for reference, that's I make decision. So no. Well, if you fade trade, Reversals on that are looking. You see how this is flattening out at the moment. I'll discuss. I mean, this is basic. The purpose of these videos is trend-based strategies to trade with the trend, but I'll just discuss this and as a fade, which is basically going counter trend. So I'm looking at the weekly here just because I wanted to see how significant that low was, because the way this has fallen away in lower lows, lower highs, nice downward trend, and it's kind of found support here. We can see in the last 3 candles, this candle is obviously still forming, but on the daily I wanted to see how far back that was to see how significant this could be. So we can see some areas there of support, some previous soft levels here, zonal support, previous resistance. So obviously on the weekly that also has a context as well. So it's quite a strong area that price is finding support at, which means that although my preference is to trade with the trend, this still looks viable for potential trades to capture the retrace in our downtrend. So in a trend we always see it extend and pull back, extend and retrace, extend and retrace. As we see here, extends, pulls back, extends, pulls back. So what I'm anticipating here is it finding support here is that it's going to retrace. Now the profit potential, in my opinion, isn't going to be as great in doing fade trades, counter trend. It makes it trickier to know when to exit. You can't really, in my opinion, it's much better just to go for fixed one-to-ones and not scale into the positions as you may do in a trend trade. But this is, I mean, this is price action that I'm seeing now on the, so on the 4 hourly, you can see how it's starting to flatten out as well. I mean, it's across the board, hourly as well, 15 minutes, all very, very flat. So the context for this is a stop loss below these lows here, right? So but underneath that troublesome support area. And you could just go with an entry based on seeing these lower time frames start to, so like the 15-minute starting to give a bit more definitive higher highs and higher lows that you can at least wrap a standard deviation around, just to give some context to the entry. So this is the 15-minute I'm looking at, and the reason I'm looking at the much lower time frames like the 15 and the 5 now is because it's a case of being a bit more, you're trying to catch the move as early as possible, and price is kind of, each time frame is within another time frame, and if it's going to move, it's going to move in the lower time frames first of all. And we're not really looking to stay in a fade trade for a long period of time. So we're trying to see how the price is starting to show its intentions first on the lower time frames, which is why there's more focus for, in this instance, on the 15-minute chart to determine its entry. So I mean, this is quite choppy. It's not great price movement. And it is slightly, riskier than I would trade normally, which is why I'm not trading it. But, there are people out there who may be interested in this. So the way I would play this, I would wait on the 15-minute to either come down in this price action here. If we were to see the price come down and interact with our lower edge of our standard deviation channel and start to show reversals, a stop loss underneath these lows here would put a viable one-to-one around these highs here, possibly in this area here. So that all looks achievable based on what the daily's saying as well, because typically what you'll find is best way to explain this in terms of price action, could use a fib retrace. So when the price it kind of extends and pulls back, it will pull back for a certain period of time. Typically we can see like the 23 retrace here. What I'd be looking at is to take profits before the previous lower low. that we were seeing in this move. So we're going long, but taking out profits before this type of area. Or if it's clear on a fib that that interacts with another level as well, then before that level. But I would anticipate as the price, or if the price were to reverse, it could encounter some trouble around this level here. So yeah, fading this, stop below this level. Your 1-to-1s are going to be around here. If you did want to leave it in for an extended move, then these type of areas here. Certainly wouldn't be considering taking a position much further than waiting for it to attempt to get to these levels or beyond for a full reversal, because it's just you'd have to wait and see for the price to kind of go out of the norm of what it's doing already. So at the moment, this price action is quite readable because we're seeing lower lows and lower highs. What you'd be saying for to anticipate or preempt a reversal is that it will have to break that price action and make higher highs and higher lows, which is a lot trickier to predict, if you like. So yeah, there's a fade trade in that, but I would suggest, just if you were to do that, if that was something I was trading, I'd be thinking 0.5% risk. And my scale of risk is typically between 0.5% up to 3% per position, so that's way down on the risk profile. So let's have a look at some other stuff. Euro GBP, no, exactly the same on the Euro JPYs. I think it was Euro Swissy that we looked at. Same concept. So I won't labour the point there and go over that again. But those are two very similar trade setups. Nah, I'll come back to that. Maybe tomorrow. So I'm waiting for this candle to close. I like this price action here on a GBP AUD. It's coming up, it's interacting with our standard deviation channel, encountering resistance, but I'd like to see a decent reversal candle and the price move past the low of that. So tomorrow will be a day to look at this again. No, 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 no. That's too late. No, 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 no. Similar story to the other euro crosses that we looked. Not euro crosses. What was similar to that? I think it was GBP, JPY. It's this resistance. We've got the previous support here that turned into resistance. Yeah, price action is great in that. Leave that. And Bitcoin. Quickly on Bitcoin, definitely be bullish on this. Daily, we've got this price action here. Higher highs, higher lows. Prices encountered support. We saw a nice reversal candle off of that a couple of days ago, Thursday, that is, a couple of trading days ago, that is. And it struggled to basically break this level. And what's good about this move here is it's also encaptured. So we've got kind of 2 points of contact, if you like. Our standard deviation channel, we can see that it's pretty much one standard deviation. It's moved away in the price since it's moved up here. We've got this support that the price has encountered across here. So really the thing to look for is timing on the lower time frames. 4 hourly isn't really that useful at the moment, but certainly the hourly and 15 are starting to show signs. So what I'd be looking at on the hourly is if we're to enter this today, see the price full like retrace, come interaction with our standard deviation. Just by the way this moves, it will probably be more than one standard deviation. So can you see how these are pierced here? So it'll probably be a bit further out. But basically just seeing that this kind of trend line support holds true. So the price come down, see some sort of reversal off of this type of level, and seeing a reversal candle, look to get long on that with a stop underneath the previous day's low. So underneath underneath those type of lows. So on the daily you can see, so I've got this horizontal in here. In fact, it's not just yesterday's low, it's the safest option is Thursday's low. So this candle, so underneath that, and that will give you, more than enough scope to the upside. If this does start to produce higher highs and higher lows in the lower time frames, your 1-to-1 is roughly around these kinds of levels, but to hold this for much longer, there's a lot of scope to the upside in this. So let's have a look at the positions that I'm in. So just trying to switch around the format of this so that focus on the stuff that is most relevant for people at the beginning, and then just cover what I'm in at the end. So if you've got any comments on the format, please let me know and I can look into that. So let's have a look at the AUDUSD first of all. So this is a position I opened and scaled into last week. I did have it open over the weekend as well. I do typically avoid opening new positions over the weekend, but if I'm in something that has still potential, I kind of make a decision on the Friday as to whether to hold it over. The price action on the Friday was good enough for me to consider holding this position. Also, the swaps are favorable in that I'm not they're credited rather than debited from my account on this. So the swaps, they're not hefty swaps that need to pay as well to finance the trade overnight. So this is fine for shorting. I entered based on this price action. It wasn't a full kind of cycle in terms of a extension and pullback and then another extension. It's just one move and then a pullback. But the daily had enough information for me to consider a reference point for my stop above these levels, and the 4-hourly as well had better at the time of entry. It was kind of around here, I guess. I think it would have been around here that I entered. So at the time of entry, the 4-hourly was showing arguably lower lows and lower highs, and it's still at the moment within. This is the same move that we saw in the daily, so it's still within our standard deviation channel. Just going to remove this here. So really, this trade still stacks in terms of where my stop loss is placed. It's not looking. It's kind of a halfway house, but it still stacks in that I've still got my stop in a sensible place. It's above our standard deviation. Outside of that, it's above our resistance zone, and based on what the daily's saying as well, a 1-to-1 reward to risk still looks viable. So I'm going to see how the lower time frame price action plays out. So this may be something that goes beyond a 1-to-1 in terms of reward to risk, but it is just really waiting on our lower time frames to dictate how I'll manage this. So effectively, I don't want it to let's have a look back on the 4-hourly. Sorry for us jumping around. 4-hourly I think gives the best context. 4 hour on the daily, I don't want it to kind of breach these highs here, breach the standard deviation, or come up to these levels here. If it were to do that, it's unlikely that I'll be able to get out at break even, but I would consider moving my stop to break even, because as it approaches here, it's probably going to find resistance or just break it. And if it breaks, I definitely want to be out, take the loss, move on to the next trade. But yeah, that's how that one's panning out. And there's also the Euro, USD. This is looking okay. Again, same thing. Entered this last week, decided to hold the position over the weekend, just because of what the price action was doing and where it was at the time. Of course, just remember when you're holding positions, I say this again, if you hold positions over the weekend, you do leave yourself susceptible to higher risk because the market can gap. So basically open at a much higher or lower price than than it closed on the Friday. So that just increases your risk. So especially when the market opens again on the sun, depending where you are, the Sunday or the Monday, you can find that the spreads are much wider for the first couple of hours or so. So you could even get stopped out just because of the spread. Your position could still make sense, but because the spread is so wide, you just get stopped out. So that's another kind of risk factor to bear in if you are holding positions over the weekend. And of course, you've got additional swaps. They can have an impact on your profitability as well. So just think about these things when you're taking positions. But yeah, the daily on the euro is looking good still. Price action, lower highs, lower lows. We've got the standard deviation channel that it's kind of come towards the average. So it could find support here, but just based on what we're seeing on these lower time frames, I'm anticipating at least for it to hit my take profit, coming to this kind of oversold area here. Same story on the 4 hourly. This move here is basically this move here, and the price action on the hourly and 15-minute is almost textbook in terms of lower lows and lower highs. So at the moment, I'm just waiting for it to do another kind of extension to hit a take profit. Now here, kind of a way to manage this, another way to manage this is to bring down the take profit to these kinds of levels to lock in a profit. Could do that so that should the price start to take out the lower highs, I'm kind of address that, and I've got a risk-free not, I don't want to say risk-free because anything can happen. The market can in fact just jump over, something erratic could happen and jump over my take profit. But I've by moving my take profit down to here, it means that if the market moves up, I've made a profit of around 40. What was that? £40, £42. And if plan A plays out, then I've made the £100 profit. So that is another way that you could play this. Just use a protective stop based on the price action on the lower time frames. There are a few reasons why I'm not doing that in this instance, but I will see how this plays out. Put my stop back to its original place here. It was about here, wasn't it? But we'll see how that plays out. And yep, that's it. That's the entire market. So hopefully that has been of some use. And if you've got any questions or comments, just feel free to leave them below. And I'll be back tomorrow with another update on the market. See you then. Bye.